Hey everyone, here's your weekly market outlook for the week of 22nd of July 2024. So let's do a quick recap of last week. I don't think there's a lot of influence in the market. I don't think we are looking at a lot of volatility, or at least not on the major currencies. Now, data-wise release, we do have a little bit of a surprise on the retail sales number. Now, if we take a look at the monthly retail sales number, it is at 0%. It is as per consensus. There are some forecasts out there that was more leaning towards negative 0.3% there, but we got 0%, but the core retail sales number actually jumped up. We actually have 0.4%. That's an increase from 0.1%. So that's, take a look at the core retail sales number in the US. We have the inflation number in the UK. That is also at 2%. We didn't see inflation drop down. Market was expecting 1.9%. So that does prop the sterling a little bit there. And, the rest of them, it's pretty much as per consensus. Like the part on the ECB front, they're not expecting to change the interest rate. And in terms of the comments, it's really neutral. No signs of any dovishness or any hawkishness at this point in time. So, in terms of the numbers there, we do have other retail sales numbers like in the UK and Canada. We do have a little bit more on the negative number in terms of their retail sales. So I think the surprise to the upside in terms of retail sales last week was definitely the US core retail sales number. That was the only one that is actually up. Now, this week we're not looking at a lot of key data at this point in time. We do have the interest rate decision from Bank of Canada. Now, if we take a look at the consensus here, we're expecting a little bit of a rate cut from 4.75% to 4.5% there from Canada. Other than that, we have the advanced GDP numbers from the US. We're expecting GDP to grow back from 1.4% to 2%. In terms of the PCE numbers, if we take a look at the personal income and spending there, we do expect a little bit of a drop in income, but we are noting a little bit more on an uptake on the personal spending in terms of the PCE numbers there. The index itself, in terms of the core PCE, expected to pick up from 0.1% to 0.2%. Now, let's take a look at all the technicals here. Now, for the Aussie USD, this one here, we had that rejection from 68 cents. Went a little bit lower than what we wanted. We didn't see that bounce from 67. So right now, in terms of how far it can go down, we're still looking at 66 cents as a potential support. So this would kind of translate to a new range for the Aussie USD, where we previously had that 66 cents to 67 cents, with 65 cents as kind of a little bit more on the lower side. This time around, we still look at 66 cents as a key support there, but we're expecting price to trade more around 67 to 68 cents for the Aussie USD. This one here, trending up, not really strongly though. This is more of a sideways that kind of grinds to the upside for the Aussie USD. Now, for the Euro USD, we talk about a potential rejection coming in at 1.09. This one pushed a little bit higher. The high from last week was at 1.0948, very close to 1.0950. But the takeaway for the Euro USD here is that this is now back within that 1.0850, 1.09 range. Obviously, this is kind of the range that we need to watch out for. And considering the momentum, we're kind of losing a little bit of a momentum here. There's a little bit of a confirmation in terms of this one here being overbought. So we do anticipate a potential correction to happen for the Euro USD, and definitely the key support level to watch out for is 1.0850. Any drop below 1.0850, then we are anticipating a much deeper pullback here, maybe towards 1.08, 1.0750 on the Euro USD. The pound USD, a much stronger currency, but we do point out the importance of 1.3, and no surprise there. Last week, price reaches 1.3, attempted to break 1.3 on the back of the stronger inflation number there. But you can take a look at the turnaround that happens on the pound USD. Now, this one here is a little bit more on the unique side because we don't actually have a proper confirmation that this is actually severely overbought at this point in time. Sterling is a much stronger currency compared to the euro and the Aussie at this point in time. way above the Ichimoku cloud. And in terms of support, we do have a lot of support: 1.2850, 1.2750, 1.27. How far is the correction going to happen for the pound USD? Probably not by a lot. We still anticipate the potential for 1.28 to be a much stronger support for the pound USD in the near term if selling pressure continue to happen at 1.3. But this is not the end for sterling though, because if there are demands in the market and price is able to push back up above 1.3 and any sustained close above 1.3 one more time, that would actually identify that there's actually a lot of demand for sterling. And potentially right now, we don't actually have a confirmation in terms of where the support is likely going to come or where the demand is going to come. But we do anticipate 1.2850 as a potential where there's a lot more demand for sterling. And again, a push back up above 1.3, that would actually confirm that, yes, the upturn is actually stronger. We could actually see potential gains on the sterling. But, definitely key level to watch out for is 1.3 on the pound USD here. All right, lastly, we have the dollar Japanese yen. And in terms of dollar Japanese yen, I always mention it's more of a buy on the dip scenario, and people are kind of looking out for where the floor is going to be. Initially, we thought the floor was going to be about 157.50 because that was kind of the bottom from the initial intervention that happened from the Bank of Japan 2 weeks ago. And then last week, it was pressured down again, but we can confirm right now it's not an intervention that happened from the Ministry of Finance or anyone from Japan at this point in time. It was more on more panic setting, a lot more on position adjustment and whatnot. And we can see the bounce that happened. 156 is definitely a stronger floor at this point in time. It pushes down even lower towards 155.50. That's kind of the bottom end of the support that we have on the Ichimoku cloud. But so far, the bounce that happened there on Thursday, that take price back above 157 in terms of where the Fibonacci retracement is located. We have a clean bounce of 78.6%. So definitely want to watch out for this week because any potential bullishness on the dollar Japanese yen, that has to be exhibited this week. If we don't see that, then we might actually see a little bit more of a range bound market condition for the dollar Japanese yen. However, if this week price is able to move back above that 50% retracement level, which is literally pushing back up above 158, then we would definitely see more of a bullish push on the dollar Japanese yen in the near future, and we can safely say that carry trade is pretty much back. But right now it's kind of there in terms of borderline. I think we're transitioning. A lot of traders out there are still wondering, is this really the floor? Are we looking at that momentum? Because we actually don't see a significant amount of buying that happened around 156 and 155.50. It's not a sharp bounce off, so from that point, we can consider that there's actually a little bit of hesitation in the market in terms of whether or not to continue with the carry trades for the dollar Japanese yen. All right, so with that, good luck to trades this week, and I'll see you soon.